bottom line is my outlook past the next few months and the Trump victory helped forestall what I inevitably feel is coming is a period of payback. We have, as a country, for decades have lived way beyond our means on both sides of the aisle. It has nothing to do about politics, where you live, what color your skin is and all, just in a general reality. And Wall Street, unfortunately, is mostly run by what I've coined a long time ago, the don't worry, be happy crowd. I actually believe it's sarcastic, but it's true that a lot of financial advisors could be tossed off the top of the Empire State Building and all the way down, they'd all say the same thing. Hey, so far, so good. So I don't expect Wall Street to see and talk about some of the things that I feel need to talk about. There's 10 of them, but I'll just name a few of the key ones. The first and most prevalent one is the amount of debt we now have. It's hard, just so you know, for me, I started in the dinosaur age of 1984. We didn't know what a trillion was. We didn't know how to count it. We didn't know what it added up to. Now we have 36 trillion in long-term debt, not counting what still unfunded liabilities are going to be. And the problem is, and some very smart people, including Musk, who I think is one of the smartest people that have been around in a long time, recognize that that can't continue. We're going to get to a point where the Congressional Budget Office has told us earlier in 2024 that they see a $54 trillion debt in less than 10 years. So if you just do math, say 50 trillion, put a 5% interest on it, it's 2.5 trillion in interest. The best this country has ever done is a little under 5 trillion in total revenue. And even if there's a boost in that, we're going to have a real difficulty servicing it because we're not going to be able to provide a lot of the other services. The other couple that are real big in my book is there's retirement and aging crisis here. You know, with 65% of Americans working paycheck to paycheck, they're unfortunately never going to reach those nice ads that we see on television about how everybody enjoys the last 20 or 25% of their lives. But they are going to become more of an economic strain, not only to themselves, but the government, because they're going to look for government to help them for these difficult times ahead at a time when it's going to be less affordable for them to do so. There's also an aging crisis within that. This is something I know Wall Street won't talk about. But there's going to come a point where by then, if I live another 12 years, I'll be 80 and I need some several $100,000 operation. And some poor 35-year-old young married man with 2 kids who's being taxed to death now to support people like me says, wait a minute, I can't even put food on my table. Why does this old man Grandich have to get this? And I go, hey, listen, I contributed like everybody else. I like to have it. And so there's going to become a battle regarding finances, but ages. And then the last couple that are really, really important to me is the political paralysis. And there's no question that for now, about half of the country feels relieved because they view it as their side won. But there is so disharmony that I don't think either party could go in a room now if we faced a similar crisis like we had in 2008 or 2000 or 87, which, you know, I started with my claim to fame, and solve anything. I think one of the big ones that isn't talked about is terrible crumbling of our infrastructure in the United States. And there's going to be an untold amount of dollars. And that's not being discussed right now in the topics about how we make America great again. But just ask anybody that's out on the roads or has to commute and all and has to go over bridges where, especially in the state where I'm from, New Jersey, so many of them are being condemned to the point where they have to be shut. So there are a lot of reasons. And I guess the best way to describe it is I'm somebody who sees the cup half empty, not half full. I wear my faith on my sleeve, and sometimes that's good, and sometimes a lot of people don't like that at all. But one of the problems that I find in that is at a time when the country seemed to be more faithful and focused on that, we weren't caught up in the secular world of viewing of what money is all about. For instance, I like to say when I was a young man, we could go down a street for miles and miles, if not hundreds of miles, and never see a public storage facility. Now we see one every couple of miles. Our dwellings are bigger. We have far more stuff. And yet all studies have described we're more of a mess now than we've ever been in any other generation and all. So I think the problem starts at home in order if you want to fix it. And that is less is more. You got to spend less than you take in. Now that's difficult in this consumer driven, debt ridden society that we live in. But that's really until we flip that switch and get back to that, there's no really long-term solution in my view. And we're getting to the point where we can't keep taking from the future by spending that money now. now, 7 out of 10 potential clients that come into our planning group, they come in spending more than they take. They have borrowed, they have deferred, they haven't fixed their cars, they haven't financed their retirements, their homes, in order to live a higher lifestyle. And the above average returns that we saw for many years in bonds, that's kind of gone, but we're still seeing it in equities at the moment, has really kept them up in an artificial net, so to speak. And I'm afraid when that net is pulled and the reality of more tougher times than we've been used to, there'll be an exaggeration. And I'll add one more. The 4 out of 10 licensed financial advisors now weren't even born when I started in this business. And why I bring that out, that doesn't mean there's not some very young, smart people. But the problem is the markets have been basically one way for a long time. And they basically learned to drive a car on a one-way street. And you can be very good at that. It's so easy, and every time there was an occasional accident, this tow truck called the Fed came along, yanked everything out, fixed everything by throwing a lot of money into the system, and things got better. The problem was if and when we do run into a market that doesn't go straight up, the lack of experience of that and know what to do in that, I think will be overdone to the downside because of the lack of experience and the complacency that exists right now. I can't imagine this. I was very young when there was a Cuban Missile Crisis, but I was old enough to be taught about it when I was in school. And here we are, the closest since then to nuclear war. And there isn't really anything mentioned about it in Wall Street right now or have any concerns about it. And I just think that demonstrates the lack of reality and too much complacency that exists in the financial markets right now. One of the reasons we've been able to fund all these tremendous deficits that we run is we created all this money and it's created in dollars. And then they go out there and currently a lot of those countries had to keep it in their reserves and so forth and so on because that's how trade was basically done. But the dollar has lost a lot of its influence in the world. It has shrunk to, some say now, as maybe as low as 70% of the trade. And many are predicting it'll be closer to 50% in the next 10 years. I think it's going to accelerate more because of how fast the BRICS are actually going to form and get running. But think about this. If that happens, and if there's at least just a competing, or they just simply create this unit that they're talking about just to trade among themselves and how they're going to settle their trade, they won't be using dollars. Those dollars are still in existence. They don't just go away. So what do? They come back to the homeland. And then, of course, that's where the high inflation rates, because then you have too many dollars chasing too few products and all. That's the number one concern you should have. The second that you should have is that these are many of these countries that control the supplies of natural resources that we need. One thing we learned in COVID, we weren't making a lot of our own stuff anymore. People were shocked to learn where many things were coming from. And in the strategic metals areas in particular, if you're going to believe in artificial intelligence and electrification and all, you're going to need a lot of metals like copper and others. And yet a lot of these countries where that could be found are moving away from dealing with the United States. So it's a much bigger story. And I think it'd be wise to your listeners to at least learn about it and follow it because they're moving in a stronger direction. When they first had just 6 of them, they laughed. Then there was 13. Now it looks like there's 40 countries and now another 40 or 50 are talking. That's a formidable group that's being formed without really anybody paying attention on Main Street, Wall Street to it. The greatest marketing tool given to the BRICS was when the United States, along with its allies, decided not only to support Ukraine by freezing Russian assets, but now taking the interest that they were deserving to have and giving it to the enemy. And so what's said behind closed doors and won't be said on some national television somewhere is what's to stop the United States from doing that to you? That's what they're going to say to those countries. That's a big concern. I think one of the things that we have to get used to that even though globalization may have changed and we're going to break down to regions in the world, you're still going to need to look at other areas of the world, if not for direct investment, meaning only companies that are there and all, understanding that there's still going to be important players. Give you an example. I believe the European Union as we knew it is over. It's finished. It may not be clear and evident to people for several more years, but it is going to stay a very loose-knit organization, and it would not shock me in the next few years that a couple countries talk about leaving it. Europe is in a very big basket case. When I entered the business, we used to talk about 2 countries as economic powerhouses, Japan and Germany. And both of them are on their backs, especially Germany. And Germany is the backbone to the European Union. So one place that I have no interest in investing in at all, even though it's outside the United States, would be the western part of Europe, especially a place like Germany. For a lot of years, I've been involved in the metals and mining industry. I left it in 2013 to focus on my business that was involved with professional athletes. But when gold was down there 12 to 1300, I just felt that it became too cheap. But I didn't buy it because I wanted to have an ounce of gold to buy a loaf of bread when you can't get one in a store or in that nature. I bought it because I thought it was going to go up a lot. So I used it as a capital appreciation tool. But it's been driven to great heights. In 2021, I even said that I thought it would outperform stocks and bonds for the next 3 years, and it did. But it's been driven by two factors, and these are the two factors. If you're going to believe in future higher prices, they need to continue. The first was the enormous buying by central banks. It's been historical for how much different central banks around the world have purchased gold, led by countries like China and Russia and India. But I think that's happening because they're not doing it for a trade. They're not doing it for a speculation. They're doing it because they recognize that a change in the world's monetary system is going to be coming, whether you like it or not. And when the inevitable debt implosion occurs, whether led by the United States or other places, people are going to want something more than fiat currency. So I think that's their main reason. The second is the BRIC nations, formation of them, and the talk of having their unit, which they're talking about how they'll use the trade to be as much as 40% in gold, has propelled gold higher. I think both those things are going to continue, but not at the pace that they've done up until now. So when it got to 2,800 all, I said we need a correction. We've had it, but I think we're going to go into a pretty well trading range now between the recent lows around 2,500 and the highs around 2,800 until we get to the springtime when the BRICS start talking about their next agenda and what's coming, and the central banks will go back to being more aggressive on the buy side. I certainly feel much more comfortable owning gold right now than what's being touted as its replacement. You would want me to be 100% candid, not 98. I think people are making a big mistake thinking Bitcoin is going to become a reserve currency. Doesn't mean it can't stay like a great technology stock or a great speculation, but to speak about it being a reserve currency, we're only one step away from the top, because the only other thing, this investment, which has been searching for a narrative now for a few years, it's had 4 or 5 different ones. It's currently going to be reserve currency, solve our debt. I suspect when they announce it cures cancer, we will have reached the top in it. May not get that top until they actually believe it can cure cancer. But what I think is important is not to lose sight of gold's historical role for a couple thousand years, and whether you like it or not, and if you're a Bitcoiner or a crypto nut or whatever you want to call yourself, understand central banks are not buying it, they're buying gold. For a lot of years, I told people this. New clients would come in and I said, listen, I want you to buy gold, but I hope it doesn't go up. And they almost do historically the same thing. They turn their head like a little dog and they go, Mr. Grandich, why would you want me to buy something that isn't going to go up? And I would go, well, looking at basically everything you own as a financial asset, you should buy it as insurance and hope you never have to use it, just like you have car insurance and home insurance. And that's really where most people should be looking at it. They shouldn't be looking at it because the world is coming to an end, or I'm going to buy a bunch of mining stocks and some penny stocks and things of that nature, and hope you never need to use it. So my advice on Bitcoin has been fairly simple. In its first run up to a few years ago, I told clients, if you want to own it, just treat it like a penny stock, technology stock. Recognize it can go up a lot, but it can fall a lot. And it did. It went up to, near 70,000, came down. When it came down to 20 something, I actually said, hey, listen, if you want to buy it, I'm not going to be. But there's too many people that got behind it. Too much money has been spent on it. The financial networks are all getting big advertisements, money coming in. People like Fink, who 5 years before said I would never touch it with a 10-foot pole, now thinks it's better than sliced bread. They're going to make another run in it. If you want to play it, that's great. The problem is it goes back to the beginning of it. I have trouble with its number one spokesperson or number one person that speaks about it. When you tell people just a few years ago to sell your stocks, your bonds, your real estate, your homes, leverage, and not only put it across cryptocurrencies, just put it in this thing called Bitcoin, I just don't want to be involved with a person or follow anybody that's following that type of advice. That is historically the worst possible financial advice anybody could ever give, to put all your money in any one thing. And that's what the person basically did. Now, the ingenuity and brilliance of this man, who I like to say Madoff in hell and whoever created the tulip mania are very jealous of him. He created this almost self-fulfilling prophecy by creating a public company where people lend the money for near nothing. He takes that and buys that product, then that pushes it up, and therefore more reason you should only get more people involved. Then that stock goes up more, far more worth than even the asset is. And then he's able to borrow more against that. I don't know. To me, it's a 21st century Ponzi scheme. But the bottom line is, to me, that's not an appropriate, sound investment. That's a speculation. You want to speculate on that? Speculation was a word Wall Street created so they don't have to say what it really is. It's gambling. And when you gamble, you must be prepared to lose part of all your capital. If you're willing to do that and you want to take a shot and it's done. But I don't think it's the cure-all, the soundest thing. And it's not about to replace gold. It's not about to become a reserve currency and all that kind of stuff that's being pushed around. Can they take it higher in this melt up that's going on in the stock market? Yes. But I don't think it's an appropriate investment, at least for portfolios that I'd be interested in having.